Hello. Good evening, everyone. Welcome to the seminar organized by Ashwa Legal Advisors LLP, wherein we'll be discussing an important topic today, wherein seamless flow of input credit after amalgamation of two companies between the transferor company and the transferee company, which was recently held by um, Bombay High Court Goa bench in case of Umicore AutoCAD India Private Limited. So before we get into the topic, we just give a brief introduction about our firm, Ashwa Legal Advisors LLP, which was founded in 2017 by our founder and partner, Advocate CA Vinash Poddar and Advocate CA Achal Poddarji, and other partners in the firm being Shailin Doshi, CA Ashud Almia, CA Shefali Girderwal, CA Vishal Poddar, myself, Advocate CA IP Pramod Dokania, Advocate Amish Desai, and Advocate Avdesh Sharma. We are a national level boutique law firm specializing in providing comprehensive legal assistance and litigation support across a broad spectrum of practice areas, and which includes taxation, both direct and indirect, PMLA, Benami transactions, corporate laws including Companies Act, Insolvency and Bankruptcy Code, IBC, SURFACI Act, and other statutory litigations and legal services. Our firm is headquartered in Surat, with branch offices located strategically in Mumbai, Delhi, Pune, Ahmedabad, Nasik, Vadodara, Faridabad, Gurgaon, and Rajkot. In addition, we also maintain a robust network associate offices across India, and which enables us to provide comprehensive support to our clients spread across various parts in India. So with that brief introduction, I hand it over to Vishal Bhai to go over the recent judgments of Umicore AutoCAD India Private Limited. Thank you.
Thank you, Pramodji, and participants. Once again, welcome to all of you all, along with the panelists. I welcome all the learned participants to this very important, and if I can use the word, path-breaking judgment with respect to GST law. Now, how it will be impacting, that is what we are going to discuss in the course of this entire webinar. But before that, for those who have only heard about this but not known the details, let me just run you through the key aspects of this particular decision. So it is a writ filed between Umicore AutoCAD India Private Limited, earlier before amalgamation, Umicore Anandaya India Private Limited versus the Union of India and the other respondents. Now, if I have to brief you about the facts. So basically, the matter is about amalgamation, which is covered under section 18(3) of the CGST Act, whereby the company, one company got merged into another company under a scheme of amalgamation, which was duly approved by the NCLT. And the transferor company being located in the state of Goa and the transferee company being in the state of Maharashtra. This is what is the basic starting point of the issue in this whole case. So whenever there is amalgamation, we all know section 18(3) allows the transferor company to transfer its ITC balance subject to transfer of all liabilities also, which has happened in this particular case, which has been accepted by the department also and taken on record in the judgment also. But when the transferor tried to fill in the ITC 02, which is the document as prescribed by Rule 41 for transferring the ITC, the portal displayed a message saying that since the recipient is in some another state, hence you are not allowed to transfer, and the portal said that the transferor and transferee should be in the same state. Now, this was the amount of credit which the transferor was pursuing to transfer under the scheme of amalgamation using the ITC 02 form, but which was restricted by the portal. And later on, when a query was raised on the portal and a letter was written to the department, the reply was on same lines that since it is not allowed because you are in different states. Now, this led to the entire writ. I'll take you to the key findings and observation by the Honorable Court, because this is going to be the key point of our analysis. And also, I'm sure this judgment would become a mother judgment, paving way for many other similar issues to be resolved. How? That is what we'll get to understand from our this entire webinar. So, taking you to the key paras. So the Honorable Court observed certain aspects about the GST law. That first, it has empowered the union to levy and collect tax on the interstate supply. This is why Article 269A, and later on it can be apportioned between the center and the state. Most important, these acts have been enacted with one very important principle in mind, that was unifying the earlier center and state levies which were distinct, with the sole purpose of allowing you to pass on the credits, thereby eliminating the cascading effect. And most important thing, which you will see even in the uh, observations and even in the memorandum to the Constitution Amendment Act and later on the CGST Act when it was brought in, there was a specific mention that these amendments are being done, the new law is being incorporated for the purpose of allowing a seamless transfer of ITC. Now, all these things have been observed and are part of this particular judgment. So, I believe this is also a very important para that you can always refer to in your other judgments where you are contesting on different issues specifically relating to ITC eligibility and ITC availability. Also, an interesting thing which I observed was that in para 19, the Honorable Court made this observation that CGST has broadened the ITC availability. And how it has broadened? See, if you compare it with the previous SENVAT credit rules, it was very much specific that it was required to be for the purpose of manufacturing. The goods were supposed to be received within the factory. However, the Honorable Court observed that the CGST Act has broadened the ITC availability base by aligning it and linking it to the business use and not only particularly to manufacture or to provision of service. Now, this is again a very important point, because many times when we are contesting different matters relating to the ITC eligibility, many times the department confines it or limits it only to a particular use in the business. However, this particular para has very specifically mentioned that ITC base has been broadened and the availabilities solely on business basis need not be related directly to your manufacturing or your service provision. Now, what is very important is that in para 20, it has been again categorically mentioned that the GST law was brought in to replace the earlier multiple tax regime. Yes, we have a dual tax whereby both center and state would be levying tax. And most important, the law is so designed that whenever there is a taxable supply, following the destination principle, the respective tax C plus S or I would be levied, and this would be allowed to be set off. Yes, barring only one thing, that cross utilization between C and S is not allowed. Barring that, the ITC which is available is utilizable. Then further, some other observations were done regarding the GST law, the mechanism of CGST, IGST. Then it was again mentioned in para 22 that when we talk about the input tax, which includes all the components C, S, I, etc., again the Honorable Court made it a point mentioning that this input tax credit refer to the credit of such taxes which are paid on business related inward supplies. Again, over here, the reference and the emphasis was on the business aspect of the IGST or GST credit eligibility. Now, para 23 prescribes or simply reads out what are the conditions which we all know are mentioned in section 16 of the respective acts. Then in para 24, again the discussions were made regarding the timelines and regarding the provisions of section 18 for the purpose of allowing credit in special circumstances. Now, what is important to mark over here is that in these different paras, the Honorable Court had specifically addressed each and every crucial aspect relating to the GST law regarding the allowability of ITC in the first place, and second, regarding the transferability of ITC, specifically when it comes to transfer of business, either by way of sale, merger, etc., as envisaged in section 18(3) read with rule 41. Now, interesting point is when I read para 30, the para 30 has made a very specific reference that the petitioner faced this denial of ITC. Why? Because there were two different states involved. However, the Honorable Court made a very specific observation in this para stating that there is no restriction either in section 18(3) or rule 41 which does not allows the transfer of credit or the ITC between two persons who are registered in different states. So this is very important that whenever there is merger or whenever there is any amalgamation, there is nothing barring in these sections 18(3) or rule 41 which does not allow credit interstate, which was the major stand taken by the department. And then further other things were discussed, that what are the requirements of rule 41 CA certification, etc. Again in 32, again Honorable Court remarked that despite compliance with rule 41, the petitioner ITC, the transfer of petitioner ITC was blocked only basis the system generated error, which said that it is not allowed because interstate transfers are not allowed. So again, it has highlighted that it is only the GSTN which is blocking, but there is no such restriction contained in the law. In fact, even in their argument, the Honorable Court made it a point, marked this point that the respondents had claimed that the technical constraints were due to the GST portal design based on a particular circular which restricts ITC transfer between different states. The Advocate General argued that interstate merger requires new registration in the transferor state, treating it as additional place of business. This para, frankly speaking, I was not very much aligning with what the respected Advocate General had argued, but fine, we are not going to go into that. Further, the court found that there is no statutory embargo in 18(3) or 22 barring ITC transfer across the states and cautioned against inferring unstated restrictions. Again, very important. Honorable Court specifically made this, that what is not written in the law should not be inferred solely basis the restrictions provided in the GSTN. Further, para 37 summarizes that since the transferor ceases to exist post amalgamations, its ITC must lawfully vest in the petitioner regardless of they being in different states. Then certain judgments of previous cases were highlighted, stating that what would be the interpretation and how law has to be interpreted. Again, that is a very interesting read. In their argument, the petitioner had tried to rely upon the decision of MMD Heavy Machinery. However, on the basis of the argument of the counsel from petitioner, that is Dr. Avinash Pudar, Honorable Court accepted this particular point that the decision in this particular case is factually different from the particular matter at hand, and hence it cannot be applied over here. This point we'll be discussing as we proceed in our discussion. Now coming to the major part. Para 41 states that the doctrine of distinct person, which is envisaged in section 25, applies only to operational units. Whereas in case of amalgamation, what happens? The transferor company is completely dissolved and that gives birth to the new company. So hence, you cannot apply this principle over here. Further, in para 43, the Honorable Court held that the petitioner is entitled. Now, this is the main part, which is, you can say, the concluding part, where the Honorable Court said that the petitioner is entitled to transfer the CGST credit and the IGST credit as per section 18(3), specifically because all the conditions are satisfied, specifically the conditions relating to transfer of liabilities. Also, there was an argument by the respondents that it would cause some sort of fiscal loss to the state of Goa. So for this, the petitioner had already given up their claim for the SGST portion, and it was highlighted in para 44 that considering the fiscal loss, the petitioner has agreed to forego the SGST transfer. So we did not contest it on that particular point. So the judgment has come on the CGST and the IGST transfer solely. So this is all about the basic outline of this particular judgment. Now I think we can take up the discussion points. I will hand over the further discussion to Shefali ji. Shefali ji, you have the case law also, right? So in case if during discussion any para has to be referred, you can take up that particular part. Shefali ji, you are on mute. Shefali ji, you are still on mute. You are still on mute.
So sorry. So I will say, first of all, congratulations to the whole Ashwa team for this particular judgment, and our lead counsel, Avinash ji, argued it himself. So a big congratulations to him. Then I will say that this judgment is on a little different footing. So from the inception of GST, like at the very time when we came to know that the input tax credit of one state will not be available in the other state. So in the beginning, no one was having this particular idea, and we were sure of a free flow as it was promised. But while reading the place of supply provision, and when actually in GSTR 2B they specifically started that the place of supply, if it is in the different state, then it is ineligible input tax credit. From that particular time, I will say we started to discuss about that kind of input tax credit, like whether it should be allowed or not. First thing, second thing, where in the law they provided for its disallowance. But I will say this particular judgment is on a little different footing, but it's very important to understand that also, that for in case of merger or amalgamation, a provision was specifically given in the law. So there was no barring in the law for the transfer, but still department denied, quoting that a particular state will lose their input tax credit in this particular case because you cannot shift it to the other state. Now, I will say that there are some very important questions we are required to answer. So, first of all, what is the nature of pool of the different taxes? So, particularly for state tax, I mean, department can have one argument that because every state's GST Act is a separate act. So, when I'm talking about a particular state's tax, so it's a different tax, it is the tax under that particular state. Its input tax credit is about the tax of that particular state. But in case of CGST, as we understand, there are no separate CGST laws for each and every state. So when I'm talking about the separability of the different pools of the taxes, so for each and every state, like for the sake of argument, they can say that the pool of state tax is different for each and every state because they are being abided by the different law which are passed by the respective states themselves. But in case of CGST, there is a one single act, so you cannot say that the pool of CGST for every state is different. Although I remember in the initial phase of GST, this particular question was asked by Upendra Gupta ji in one of the webinar of ICI itself. And then he said that the pool of even IGST is separate. And in some of the cases, even department is of view that for a separate state, even the pool of IGST is separate for that particular state. So I will say the very basic promise of GST of free flow of input tax credit. So I have this question even for those credits which are being barred because of their place of supply provision, like in case of hotels. Like as a business, why you made such kind of provisions that I denied an input tax credit on my receipt? Like irrespective of the fact like where the supplies were consumed, because in each and every provision that concept of destination based tax is not followed, then why specifically input tax credit? And again, I don't think it is being incorporated into the law properly to make the taxpayers abide by this particular concept, because in the law I was unable to find out any specific provision which will say that the input tax credit of a particular state will be utilizable only in that particular state. So that is a different scenario, but yes, this particular judgment will have an impact on that scenario also, because that is also a pain point. But I will say because generally the amounts are not very large, so taxpayers have kind of accepted it. So I don't know if many people are litigating that particular issue or not. But in this case, they are even not allowing it in the case of merger. So first thing I need to understand that in case of merger, they said they are two distinct person, but in merger, actually they are not two distinct person. So one entity is merging with the other entity, and resulting entity is emerging after the merger of the first entity. Whole business is being transferred, all liabilities are being transferred. If there is any stock, that stock is transferred. So in case the resulting company will make any sales in the future, so they will definitely have to pay tax on it. So I will say, just like any other transition provision, there should be a free flow of credit. There is no barring in law itself. So for me, the stand of department even denying this input tax credit, I will say even that was kind of a little, I will say a feeling of greed that okay, it's my state tax, so I will in any case deny it. So now I would like to have make it more clear in form of some question answers, and as we understand that our lead counsel is already uh, a participant in, I will say a speaker in a panelist in this particular webinar also. So Avinash ji, first of all, I am maybe taking a last question in the first place. So, what will be the impact of this particular judgment, the ratio which is being laid down in this particular judgment? How it will impact, or can we also, I mean, take its benefit in the cases where the input tax credit is disallowed due to that place of supply provision? So, will it be beneficial in those cases also?
See, Vishal Bhai has already said that this can be termed as a path-breaking judgment.
Yes.
I will slightly deviate from that.
Mhm.
I cannot say this because this is my brainchild, so I'll not say it is a path-breaking judgment, but certainly it is going to have some very important or very relevant impact on the way and manner in which the input tax credit provisions were being perceived till date. See, this particular case was very, very limited or was within the very limited compass. And that compass was that if a company located in one state get merged with the another state, can you place a restriction saying that no, if the merger or amalgamation has to happen or the demerger has to happen, it has to be within the same state. So that will allow you to transfer the credit, otherwise the credit will not be transferred. That is the prime argument. That cannot be the purpose of the lawmaking. So therefore, important here is when we interpret a law or when we try to construct, the rule of construction says two things. One, that law has to be read in the same manner in which it is written. And if there is any ambiguity or the question is arising because of any, or maybe because of the non-clarity or anything, in this, there was no non-clarity. The only non-clarity was that the GSTN was not permitting. That was the only problem. Had it been a case that GSTN would have allowed, then there was no dispute as such. So therefore, the question arose that whether there is any restriction in section 18 clause 3 saying that from one state to another state, the transfer of the unutilized balance of the amalgamated company is restricted from one state to another. That was the only query. So therefore, the court entered into that, and in one of the paragraphs, the court have also mentioned the international jurisprudence wherein they have said that they cannot add or amend any word in the interpretation, and therefore the law has to be read as it is, and they have read the law as it is. It is a very simple case. Law does not place any restriction. Where is the question that GSTN places a restriction? So that is the only simple argument which was twisted, turned, and a lot of I would say other arguments were made with regards to the registration, with regards to other issues. And let me clarify this, that MMD Heavy Machinery was not relied upon by me. It was relied upon by the other side. Respondents have relied upon that. And we countered it that is not applicable. That is how we distinguished it. And the court appreciated it. So far as your question is concerned, when it comes to CGST of Maharashtra, let's say a hotel credit, which is being reflected in my GSTR 2A, because I have given my ITC that GST number, and I am located at Gujarat, whether I can take that credit of CGST or IGST. Can this judgment help in that? I'll say apparently not, but indirectly yes, because the ratio which is let down is that since CGST and IGST are the centers component, where is the question of any loss to the revenue, and where is the question of restricting the transmission from one state to another? So if we borrow the same logic, then certainly the restrictions which are placed because of the I'll say, because again I will say because of how we are reading the law. Otherwise, again, my point is that even in those cases, there are no restrictions. Even in place of supply, if I have to apply, I personally believe that there is no such restriction. If CGST credit is there in Maharashtra, if I've spent there, I've gone to the hotel or many or any other place which wherein the C and S has been levied, then there is no restriction that I cannot claim that credit in Gujarat or in Delhi. There is no specific restriction in law. Although there may be restrictions by if we go to the GSTN and other procedures, I'm not going to that. So answer would be, it is not apparently applicable. But yes, this opens the Pandora box. And therefore, borrowing this argument that CGST and IGST can be availed in multiple states also, or one state can transfer it because there is no loss which is being caused to the center. That argument, if we take, and that ratio, if we borrow, then certainly this can be argued and this judgment can be relied upon in all those issues also. And let me take one another instance also. Let me clarify. I'll say, let me clarify. We have not surrendered SGST credit. See, we have placed before the court our argument very clearly and precisely that section 18 subsection 3 read with rule 41 has a specific requirement that all your assets and all your liabilities must be transferred. You cannot transfer in isolation. It has to be all assets and all liabilities should be merged. The same happened in our case. The question is that state tax will become the, I'll say, the part of that particular revenue of that particular state only when it is consumed in that particular state. So there may arise a situation that after merger, there might be some closing stock which is lying in the stock register and which is also transferred in Maharashtra from the state of Goa. And therefore that SGST was never consumed in that particular state, so it does not belong to that state. And law has no restriction. If we read SGST Act, identical provision of 18 clause 3 is there in the SGST Act. Had it been the intention of the lawmakers, then there would have been a restriction in State Act that from one state to another, the credit cannot be transferred. So therefore, I'll give you one example. I was having, let's say, a stock of 1 crore rupees. The tax thereupon is 18 lakh at the rate of 18%. I'm having a SGST credit of 9 lakh rupees. Now, when this 1 crore stock will be transferred to the state of Maharashtra, in the state of Goa, nothing is being consumed. And therefore, Goa does not have any right on this 9 lakh rupees credit, which is with me. And therefore, it ought to have been transferred to Maharashtra, because when I'll supply these goods in the state of Maharashtra, I'll levy 9 lakh rupees SGST or 18 lakh rupees SGST in my example. So if I'm levying 9 lakh rupees of the SGST, then the tax will have to go to the state of Maharashtra. Otherwise, if you can now just think over, it is going to be double jeopardy, because Goa has retained that tax amount without the goods being consumed there or the supply being consumed there. Whereas now when the goods are or the supply is being made in the state of Maharashtra, again the tax will be levied on the same transaction, which is impermissible in law. So this is leading to double jeopardy. But unfortunately or fortunately, this was much factual, because I need to show that this is the balance sheet. These are the stock which are getting transferred. Stock is of much higher value than the credit balance which is there in the SGST. I took the instructions and the client gave me instructions that you forget it. We are on the larger portion, which is 3.5 crores. We are not on 1 lakh rupees. So therefore we surrendered it. Otherwise, in our pleadings, in our arguments, we argued for SGST also. So therefore, all these participants should not take this that we have never argued for SGST. And I personally believe that even SGST can be transferred if we are able to demonstrate that the consumption has happened in the other state. As I've demonstrated, 1 crore rupees stock, 18%, 9 lakh rupees SGST, 9 lakh rupees CGST, and my SGST balance is 5 lakh rupees. It is lesser than the liability which is going to arise after the transfer. Now 1 crore rupees transfer has been done. 18.3 has been invoked. Now 1 crore I'll supply in the state of Maharashtra, 9 lakh rupees will be the tax liability. So it is being consumed in the state of Maharashtra, not in the state of Goa. And therefore, where is the question of Goa retaining that 5 lakh rupees? of the credit.
Mhm.
But in the facts of this case, since I was under the instruction, I had to surrender it. Otherwise, in the pleadings and the argument, these arguments were taken and court has appreciated also, but they don't want to, or they were not in the position to go to the facts of the matter. Otherwise, बहुत लंबा हो जाता.
Mhm.
And maybe I would have not got this judgment. So therefore, we at that point in time we decided that let us forego this particular or surrender this particular thing, provided we are getting the credit of IGST and CGST. So that is that I wanted to add so as to clarify to all the participants.
So one very important revelation by Avinash that the part of SGST in this particular judgment, so court didn't deny it or accepted it because we accepted to forego it, and that was due to the mandate from the client side because it was very small amount and they didn't want it to like make it like very prolonged litigation. So they themselves agreed that okay, it's very small amount, so we're ready to forego this particular amount. So that was the only reason that there was nothing about particularly that SGST amount. So Avinash, if that SGST amount was not foregone by the client himself, so I mean, what is your idea? What is your estimate that whether the we could have get the same ruling for that part also for the SGST also?
I am 200% sure that certainly the same ruling could be done. Reason being, there are three laws: IGST Act, which borrows the CGST law, and therefore 18.3 of CGST has to be read with IGST, Section 20. Then State Act, 18.3 is there in the State Act, in the Goa state also, in the Maharashtra state also, in all the state acts, 18.3 is there. It is verbatim same, identical words are used. So therefore there is no restriction. So what is the ratio in the judgment? That there is no restriction in law. There is no restriction in 18 clause 3. So you cannot place restriction in GSTN. The same would have been the judgment. Only thing is that the demonstration was required. The demonstration which I have just given by way of an example, 1 crore rupees, the goods are transferred to Maharashtra. It is getting consumed in Maharashtra. So therefore, the liability would arise and the tax should go to Maharashtra. Where is the question of credit? See, please understand the credit is of the purchases. When I made the purchase, the credit came to me. Now the purchases are getting transferred to the another state. And there it is going to be consumed. So where is the question of retaining this credit in this particular state? When it is not being consumed, you do not have the onus. You cannot retain this particular amount. So therefore, the answer would be absolutely same would have been the judgment, but it would have been a longer period of arguments. At the same time, since the amount was not substantial, we took this opportunity to surrender it. Had it been the reverse case, there would have been a credit of 3 crore rupees in SGST and 1 lakh rupees in CGST. We would have argued at the same length, on the same point, in the same way, demonstrating, as I have demonstrated before you now, that 1 crore is stock being transferred to the Maharashtra and the liability of 9 lakh arising there. A balance of 5 crore credit cannot be taken away from me, saying that Goa will be in loss or the transferor state will be in loss, because I have already demonstrated that GST is a consumption based tax. So it is not being consumed in the state of Goa. So where is the question of retaining that tax there in Goa? So by that argument, my answer is I'm extremely sure that judgment would have been the same. Ma'am, you are on mute.
So, after all this discussion and deliberation by Avinash ji, there is one very important question. There is one term which is we are repeating again and again, and that is about consumption. So, we all understand GST is a consumption-based tax, a destination-based tax. So, in the entire law, there is no criteria for consumption is given. So, I'm just trying to understand a fair idea about like what should be the ideal criteria for consumption, whether it should be the stock, that is the closing stock, or whether it should be the balance in the input tax credit ledger. And like in case of services, we cannot have anything in the stock itself. So in that particular case, there is no possibility of stock. There may be, I mean, some measures to evaluate it if required in some particular cases. So what should be a fair, I can say fair criteria to understand whether the particular supply, service or goods, whatever, it's consumed in a particular state or not?
See, what I understand is that we can demonstrate by way of showing that end user was there in that particular state, and therefore the consumption happened in that particular state. So if I am able to show that I have sold the goods wherein I have applied C and S, it means that it is finally levied on a local person there. And therefore, for me, the consumption has happened in the same place. Now, if I have sold to Mr. X and then Mr. X also trades it and he sells to some other state, then obviously the consumption will go to that particular state and the tax will be transferred by way of IGST and the settlement of the funds scheme. And in that particular state, the end consumer would be there and he will be consuming it. The tax will be retained by that particular state. So my answer would be to keep it simple and not too complicated, because there are certain guidelines also, OECD and certain guidelines also. I'll not go into that, but practically thin vanilla, if I have to say simple vanilla, the answer would be, for me, if I'm selling in the state of Goa, the goods and the stock is zero, then in that case, the entire consumption has taken place in the state of Goa, and Goa is right that the tax credit, if any, which is unutilized, must be lapsed. But if there is a stock which is getting transferred to the state of Maharashtra or to the state of Uttar Pradesh or any other state, and then there it is being consumed, then Goa does not have any right to say that we are going to bear losses or we are going to face losses because the credit is being transferred. Because that question will not arise, because finally the tax will be paid at the time when the supply happens. And supply will happen in that state where the transfer has taken place. So that is the simple answer, that for a supplier, the consumption has to be where he is billing that person. Now, if he is billing in B2B, then also I would believe that I'll not go into who is going to be the end user. I'll be concentrating only who is my recipient. And as per him, and as per that, my consumption as per me would be that particular state in which the recipient is there.
So in case there is no stock, so there can be scenarios when there is a balance in input tax credit ledger, but physically there is no stock. Sometimes it may happen like I may have sold the whole stock at a lower price. So in that particular case, we cannot say that consumption will be in the separate state. So consumption will be in the same state only.
Yes, if we are going for the consumption theory,
Yes.
consumption is one of the theories.
Mm-hmm.
I gave one example why SGST credit should be transferred, was the consumption theory.
Mm-hmm.
But the primary theory is the statute theory. Statute says if there is a transfer, amalgamation, merger, demerger, or the change in constitution, then the credit which is lying must be transferred. And the principle of interpretation, rules of interpretation says that we cannot add a word, we cannot subtract a word. But something which is very important is we need to appreciate the purpose of that particular provision. And purpose of that provision is that when a company is getting merged with some other company, then whatever assets it is having, it is to be transferred. Whatever liabilities it is having is to be transferred. And similarly, if it is having any asset in the form of credit, that also needs to be transferred. That is the purpose of the law. So that is primary, and all those arguments of consumption and everything is secondary.
So that is one very important revelation again, because while we were discussing the judgment, it's natural to creep into your mind that it was allowed because there is a consumption theory, and somehow we were being able to prove that because the goods were being consumed in the resulting state, that is state of the resulting company and not the merged company. So that was the reason it was being allowed. But we need to understand one very important thing, that consumption is a theory. So it's the nature of text. It's a part of that entire, I will say, the entire setup of this particular text design. But if government wants something specifically to be consumption based, they should have provided it through the provisions. So if something is not given in a specific provision, it's not clearly communicated through the drafting of provision, we cannot deny or allow something, taking the shelter of this particular theory of consumption. So that is an important part. I will say we need to understand that consumption theory is fine But again, it is not the decisive factor, even if this particular judgment. So consumption was not the decisive factor. Decisive factor was how the law was formed, how the rules were formed, how the particular section was formed. And as you all understand, there was no specific barring in the provisions of the law. That was the reason, and not even about it's about the barring. The thing is that a provision section 18.3 was specifically allowing for this kind of credit. So that particular section is made only to cover these kind of transaction, and it specifically allowed these kind of credit. So that was the reason it was being allowed. So now there is another very important question, and I will say not directly to the judgment, but when it comes to the place of supply based denial of the input tax credit. Because what I understand, like I was discussing this judgment to some of my friends, and at this point of time, maybe not a lot of people are litigating for those small amounts of input tax credit which they have to forego because of those place of supply provisions. But after this judgment, some people have that hope that like we should be like go into litigation for those kind of things. So one very important part is just as Avinash said that it was allowed because there was no restriction in provision. It was specifically given in the provision. So what I'm trying to understand that even for those credit which department doesn't allow, that because the place of supply is in different state, and their argument is, and sometimes I may also feel that that argument is valid. So for CGST it's a different scenario. CGST is single act, but they say that like Maharashtra SGST is a separate act which is being passed by the Maharashtra state. And in Article 146, when we divide the powers, so 146A was separately inserted for the GST. So when we divide the power, so for this particular thing, like to levy the GST of Maharashtra, state GST of Maharashtra, that particular power is with Maharashtra state. So on the same lines, there is a separate act for Gujarat, there is a separate act for say UP, Karnataka, Tamil Nadu. For each and every state, they have their specific state-based acts. So their argument is that whatever tax you are paying to the state of Maharashtra, it's not just GST, it is Maharashtra GST. So I cannot allow that particular credit to a person who is only registered in Gujarat and who is not having any place of business in the Maharashtra. So this is the basic argument. So for CGST, we can definitely understand that in CGST there is no such barring, because I also tried to read the act and tried to find out like where in the law it is written that in case of CGST or SGST of other state, you will not be allowed to take input tax credit. But yes, for SGST, we can take this particular argument, but for CGST, there is no such argument because it's a unified law for the whole country and not for the particular state per se. So I just want to ask you, like, what is the force of this particular argument that they are the state tax acts of those particular state, so that state is not allowing credit of its tax, what is being paid like under it, I will say its legislation to the other state. Like, how valid is that argument?
No, I could not get the point correctly, but if I'm able to understand it, your argument is like if there is a tax which is levied, let's say in the state of Delhi, then can this not be transferred to the state of Uttar Pradesh? You are talking about SGST or CGST, IGST both?
Only SGST. For
Huh.
the state acts, we are only talking about SGST because those acts are separate.
So my understanding would be we from day one we are harping upon one thing, one nation, one tax.
Yes.
And the objects with which the GST law was introduced, even the purposes and the statement of objects, which is there in the 101st Constitution Amendment Act, is that there has to be a seamless flow of credit. There cannot be cascading impact of taxes. So when we consider all those things, I'm of the view that there is no restriction in law. To be very honest, there is no restriction in law that one credit cannot be transferred to the another state's credit. Reason being, again, I'll harp upon the same point that this law has been designed not as an original base that was service tax and excise, that was origin based tax. Now this law has been designed as a consumption based tax. That means where it is going to be consumed by the end user, that state would be eligible for collecting and retaining the credits. I'm again repeating, my words are collecting and retaining the credits. Otherwise, at multiple states, when it is transmitted from multiple states, every state is eligible to collect the credit, collect the tax. but may not be in a position to retain the tax. Reason being the consumption is in some other state. So if we are able to prove that the consumption happened in some other state, then in that case, I'm of the view that the credit should be allowed. I'll give one example. There is always a confusion or a debate that what will happen in over-the-counter sales. For example, I'm coming to Delhi and I'm purchasing a mobile set, or let's say forget about mobile set, some instrument which is to be used in my business or profession. Now, Delhi person has handed over to me at the counter, and therefore he has levied CGST and SGST. I have given my this GST number to him. Forget about the place of supply. Maybe in that situation, the place of supply should have been IGST should be levied, and he should have entered my address of Gujarat and the GST number of Gujarat. But he has not done it. He has levied CGST and SGST. But does it mean that the goods are being consumed in the state of Delhi? It is getting consumed in the state of Gujarat. And therefore, the underlying principle is that where it is getting consumed, the tax should come to that particular state. So what I'll do is I'll take the credit here and I'll pay the taxes here if any output tax is to be levied. So all these things can be debated upon and can be argued upon. But whether it is the right time to argue those things, as you rightly said, that the amount is not substantial, and therefore whether these questions should be brought before the courts or it should be argued before the appellate authorities is a question that we need to decide. But certainly, yes, I am of the belief that there is no restriction in law. And unless there is a restriction in law, the GSTN or any officer or any administrator cannot restrict such credits.
So in some particular cases, the amount can be substantial. In some type of businesses, actually, it can be like in some cases, the law says that if some goods are going into some place and they are being installed into something, so place of supply will be that state. So sometimes it may happen that I sold something and those goods are going in installed into some kind of more property. So that can be like turnkey kind of project. So
And even if you appreciate now, even if you appreciate, then the law is made very clearly. CGST and SGST are qua-states.
Mhm.
They do not anticipate the situation of interstate. And therefore, there are no place of supply provisions. Because there is no bar. The bar comes from place of supply provisions and it is applicable only in IGST cases. So that also is one of the way to look the law, that if there is an IGST, then credit is not restricted. But if there is C or S, then the credit is restricted. The reason is that the acts are different. And there is no place of supply provision in those laws. So that can be one way of looking at it. But even otherwise, if we look into the entire portfolio, then SGST, CGST, and IGST, these are three buckets. And anything and everything pertaining to one registration goes to that particular bucket. And as per me, there is no bifurcation state-wise. There is bifurcation registration-wise. If you have different GST number, then the blockages are there. If there is no multiple GST registration number, it is one GST registration, there is no blockage. And therefore, I am of the belief that the credit could have been availed or credit should be availed. There is no challenge in that, except the challenge of GSTN or whatever challenges are there.
So this is my last question from you. After that, we'll be taking the questions which are in the chat box. I will say it may be a little more on the constitutional side. So I think I quoted the article incorrect. I said it's 146, it's 246. So in the earlier article 246, when we were dividing the powers between the state and the center, so there was one thing: if something is written in the state schedule, then center will not interfere into it, and that will be the absolute power of state. And when I'm talking about state, so there is, there is no, there is no interference from any other state is possible. So not even from the center, but from other states, there is negligible possibility. So when we inserted Article 246A specifically for the GST, does the states have same type of autonomy in that case also? Like if I'm a state, then for my particular case, I will decide that no, if my place of supply is here, I will not allow the credit of my tax into the any other state or a person who is registered in other state. I mean, do they have that similar kind of autonomy in the 246A also? what they were enjoying in 246. So if states can say that in 246A also, we are giving specific power to make provisions for the tax in my state. So not for the CGST, but from the state's point of view.
See, as per me, if we read 246 capital A,
G.
is only for intra-state transactions.
Yes, of course.
And it is a non-obstant clause. So let me just read it. What does it say? It says, notwithstanding anything contained in Article 246 and 254, Parliament and subject to clause 2, the legislature of every state. So therefore, it is giving concurrent power that on a particular transaction, the Parliament will also levy tax, and at the same time, on the same transaction, the legislature of that particular state, which is SGST, will also levy the tax. So when it comes to autonomy and all, we'll have to refer to Schedule 7. It says there are 3 lists:
G.
union list, state list, and concurrent list.
Yes.
So I'll answer in this way, that it is neither falling into the union list, it is not falling into the state list.
State list.
It is falling into the concurrent list. And therefore, there is no question of autonomy of any of the states. It is a simple question that it is a transaction wherein any state or any union territory both can levy tax simultaneously. They chose that there has to be the same rate of interest. Otherwise, there could be a situation wherein center will levy 5% tax and state will levy 10% of tax. That is not restricted. So it is not equal to be required. So I'll answer. The answer would be no. That you cannot say that the tax which I have collected will not be given to the other state. It has to be given provided the consumption happens in that particular state. Because then your territory will be lapsed. You will have to go to Article 269 capital A. You will have to go to IGST. If it transfers from one state to another, then the entire mechanism will change, and it will not be SGST, CGST, it will be IGST. So consuming state therefore is important.
Right. So anybody wants to add anything? Pramod, you want to add anything into this? The whole discussion?
No, I think this certainly, as you said, it's a landmark judgment and creates ways for other areas that also are not being taken as input credit today will be probably coming on our way. So I think once again, I congratulate Ashwa Legal and our lead counsel, Dr. Avinash Poddar, for this landmark judgment.
So for everyone, we discussed it very thoroughly, and we also discussed side effect of it and some like other transactions which are generally not being litigated. But what I understand, many people want to litigate it. But because of that one understanding, because I specifically asked this question from Avinash, because when people are arguing, they generally give these kind of arguments that it will not be allowed because of these particular situations. So that was the reason I specifically asked these questions so that they can understand that even in those cases, I will again say many people actually want to litigate, but they don't because they firmly believe that they will not be going to get any relief on those particular cases, and they themselves believe that the credit of state tax of a particular state will not be available to the other state. So, and while we were discussing our particular judgment, the judgment which is being argued by on counsel, in-house counsel, and one for the client. In this particular judgment, one very important thing you need to note, like everybody is writing a lot of updates on it, but there is one very specific particular part that the SGST was not discussed or something specifically was not said, and we actually agreed to pay because it was very small amount and we had that mandate. That was the only reason. Otherwise, the result for even SGST, and Avinash is very sure of it, 100%, 200% sure of it, that even the result for that SGST tax also. So he has also given the reverse scenario. So the thing was the tax amount in CGST bucket was very huge and the tax amount in SGST is very small. So that was the only reason we were agreed to forgo that particular amount. But if it was a reversed case, ji sir.
Even if you refer para 44 of the judgment.
Yes.
Para 44, what does the court says? It says there appears to be some issue about SGST. And what is the logic that the court is giving? SGST, as the SGST is to be collected by the state, and it will be consumed by the state. And permitting the SGST to be utilized in the state of Maharashtra would result in the financial loss to the state of Goa. What is this observation all about? The observation revolves around the consumption. Say, because the court is presuming that the entire credit or the entire supply has already been consumed in the state of Gujarat, Goa. And therefore, now permitting it to be transferred to the state of Maharashtra will cause the loss to the revenue of Goa. But had it been a case that the court would have gone into the merits or the facts of the matter, then they would have appreciated that the stock is also transferred and therefore there is no question of consumption in that particular state. Henceforth, the court has very clearly said that if the consumption is also in that state, then the transfer of SGST will not be permitted. But if we are able to demonstrate that the consumption has happened in some other state, then certainly the credit is liable to be transferred. On that ground, I am saying in the facts of this particular case, I am saying that I am very sure that if SGST was also to be argued and to be or the amount was substantial, or the mandate which was given to me by my clients, because we have to work with as the instruction as per the instruction of the clients. So if the client would have forced me that no, get an order for SGST also, then I'm sure that court would have agreed to it, provided we would have been successfully demonstrated the facts of the case that the stock has been transferred and the consumption is going to happen in the state of Maharashtra.
So again, para 44, very important. So what my take is, don't think that like SGST was seen in a different footing by the court. That's the only thing I want to say. You are not supposed to like, because when people are making the write-up and because it may cause a confusion between the people. So don't think that it should have been on a different footing. That's the reason SGST was separated. The only reason was it was a very small amount. If the reverse case was there, it should have also been allowed.
Shefali ji, allow me to read this completely, totally. Then everybody can appreciate, because we have a habit of reading what we want to read.
So you want me to copy paste the para 44?
No, para 44 itself. Para 44, from where I have stopped, I'll read it further. And it will be consumed by the state of by the state, and permitting the SGST to be utilized in the state of Maharashtra would result in financial loss to the state of Goa. Till here I read. Now let us read further. But since the learned counsel for the petitioner had instructions to make a categorical statement that as far as the unutilized SGST in the sum of rupees so and so is concerned, he will give up his claim for its transfer. Therefore, the court has not gone into the decision whether the SGST should be transferred or not. Otherwise, the court has not given any decision on merits that SGST cannot be transferred. Please appreciate this.
Right.
Then the conclusion, we are of the clear view that the transfer of IGST to the tune of so and so and CGST in electronic credit deserves to be transferred. Had it been a case that I would have argued for SGST and demonstrated that the consumption happened in the state of Maharashtra or in some other state, Goa cannot retain it, then the answer would be affirmative so far as IGST is concerned. That is the point which I am trying to drive.
Right. So whole para is being read by Avinashji. So again, you all need to be very clear about this particular thing, that they have not considered this particular part on the merit just because of the reason that the client agreed to forego that particular amount being a very small amount and they didn't want it to further litigate it. Otherwise, the result to the whole bucket of taxes, whether be it's IGST, BCGST or SGST, it should have been same from the side of whole. So this was the one part. So for the merger cases, they have cleared it that like irrespective of the fact of consumption. So again, the decision is being given on the basis of what is being written in the law. So we can always
And I've just seen, I'm sorry, मैं आपको interrupt कर रहा हूँ, but I've just seen Deepali ma'am is there. She's our associate and she's helping me a lot in Bombay High Court. We argued this matter, we filed this matter first in the Bombay High Court, the principal bench, because of the past jurisdiction there. The order was dictated in our favor. It happened in 2024, if I'm not wrong, in the early 2024, maybe in February, March. Then unfortunately, because of the jurisdiction, and the court was of the belief that the jurisdiction lies at the Goa, we were supposed to file afresh at Goa. Otherwise, this judgment was already pronounced. Ma'am is writing in 2022. The judgment was already pronounced in our favor in the open court.
Okay.
And the same was the observation which was given by the then Justice K. Sriram. I am naming that because it is recorded, because it has to be on record. So the judgment which was pronounced was that if any such situation arises in any other case, then also this judgment will apply. They cannot place a restriction on, and see the purpose is, आप ये रिस्ट्रिक्ट नहीं कर सकते कि आपका मर्जर अगर करना है तो आप एक ही स्टेट में करोगे, आप दूसरी स्टेट की कंपनी के साथ मर्ज नहीं कर सकते. You cannot, like, Companies Act does not restrict it, NCLT does not restrict it. Now you cannot place an artificial restriction and tell me how to do business. GST law cannot do it. So that was the logic in which, or following which, the order was given. And now just officially उन्होंने ये order अभी इस court ने दे दिया. तो यही judgment होना है, and I'm sure it is going to travel to the Supreme Court because of para 45. Para 45 में, because the court has indicated and instructed to GST Council also and to the GSTN also to rectify this particular, or to reconcile this particular issue. So it becomes a issue which is now applicable to everyone, even if who is not the petitioner. And I'm extremely sure that all the large corporates who are into the mergers of into multiple states are going to be benefited out of this. So a lot of litigation is going to come up, that is for sure, only on this particular issue. And this will travel to the Supreme Court because of these instructions. Because court has given 6 weeks. 6 weeks not only to give me transfer physically, also 6 weeks I am reading as a whole, but also 6 weeks to GST Council and GSTN to rectify, to correct this and incorporate in their mechanism. So that will be a challenge because they don't intend to do that.
Great. So I would like to.
But I personally believe it is not a landmark judgment. It is merely a normal judgment which is pronounced at the normal course on time. But it has repercussions. And I can share my courtroom experience that before vacations in the month of May, first week, like vacation se pehle, it was listed in before Goa bench. I went there physically. The Honorable Justice said that after hearing the brief facts of the matter, it seems that it is going to have an India-wide repercussion. And therefore, let it be post-vacation. We'll hear you at length, and they fixed a time at 2:30. That 2:30 will take up this matter and we'll hear you on this particular date. So repercussion may be on a higher side because various, as you said, various permutation combination, C or C का क्यों नहीं मिलता है, S और S का क्यों नहीं मिलता है, that issues will now be creeping up, and basis this decision, many writ petitions can come forward.
Right. So it was very wonderfully explained by Avinash ji. And I would also like to acknowledge the presence of Deepali ma'am. Thank you so much, ma'am, for joining this particular session.
Thank you for helping me throughout since in the last 4-5 years.
Yes. Ma'am, if you want to add something or want to say something, you can.
Even this AR also is referred by Deepali ma'am only. Otherwise, I don't know anyone.
That is also very important part actually. So.
Ma'am is also arguing one matter, if I'm not wrong, ma'am. अगर आप अपना चालू करते हैं audio तो, she is also arguing in Punjab and Haryana High Court of the same issue, I think.
Ma'am, you want to add anything? Okay. Let's continue. If you want to add anything, ma'am, you can still add. Okay.
She just message, no problem.
She must be busy somewhere. She has texted.
Good.
Okay. So for all of our audience, now if you have any question, you can put it into the chat box. But one very important thing, I will say the summarization of this whole conversation is that for this particular judgment, it was not just about this particular case, because as Avinash said, that according to me, it's not landmark, it's a simple judgment because merger provisions were already given into the law and department had actually no concrete footing to oppose it. And their only reason was, which generally department people have, is that
I relied upon so many cases. Almost 12 cases I relied upon. There was an entire compilation which we placed before in the Bombay High Court principal bench also. The same compilation was there. जो भी Eicher Motors, Dai Aichi Karkarya, Adford Technologies, all these judgments we relied upon, but court has not taken cognizance of that because that was not required. Case law is required when the act is not clear. Here the act is very much clear. Because the act was very much clear. But one more important aspect we, I will say, bring out from this particular discussion is that for the other input tax credit, because I think so many people were more interested into this judgment because of those other input tax credits.
which are not being allowed because of that place of supply provisions. So we specifically discussed the part of those cases also, the specific provision related to those cases, only to make you understand that even in those cases, there is possibility to litigate, there is possibility that you can get the benefit. That definitely depends upon the cost benefit analysis. So in case there is a huge amount involved and where the place of supply is falling in the other state, you can definitely litigate that part also. We specifically discussed the constitutional provision, the provisions in the law itself, so that there is no confusion, because it was a confusion in the mind of many people that because they are the particular state act, so it's like it's right to not to allow it. So from the article of constitution which allowed this whole setup, we specifically, I asked Avinash to specifically take that part also, so that you can be clear in your mind that yes, there is possibility in those cases also. So we can definitely take up those also, because that will definitely be a landmark. So Avinash said that this particular was not the landmark, but if we go in litigation for those cases, that will definitely be a landmark judgment.
There is nothing called landmark. If it affects us, we say that it is landmark. If it does not affect us, we say it is not a landmark. It is nothing is called landmark, but yes, a judgment which is being followed or a ratio which is being let down in black and white by the courts is certainly an appreciable judgment. That is something to be appreciated.
Right. So I'm just scrolling through the chat box and just finding out they are not all the questions. There are some texts also. Let me find out if there's something which we can
One
further.
question says, is there an additional option of refund application in such case, or it needs to be reversed? So
Refund in what?
suppose there is a input credit transfer that happens after amalgamation. In that case, can the transferring company go for refund? They're
No,
not
no.
able to get it.
There cannot be any provision of refund. It has to lapse. Either it has to lapse or it has to be utilized.
So I think this is the question of Bipin Soman, right? No,
Yeah.
it's
Yes.
Bipin ji. So this was not the case for refund of input tax credit laying in the ITC ledger at the closure of business. So some days back there was a judgment of Sikkim High Court for that topic also. But I just want to clarify that these are two different aspects. Here we are talking about the merger and the transfer of credit to the resulting entity, the merged entity. And we are not talking about the refund of the input tax credit. But yes, there is one case we are working on, our Ashwa team is working, where the input tax credit, because in this particular case also, the whole amount of ITC was adjusted towards only one tax, that was SGST. That's why SGST amount was very small and CGST was not adjusted. That's why the CGST amount was very huge and it was piled up, because they were adjusting the whole IGST with the SGST and there was a huge amount lying in the ITC ledger only for CGST. So in this particular case, the scenario was different. But just consider if there was no amalgamation on merger, but the business was closing. So in that cases, you may have been allowed to rectify your incorrect entries in the previous returns, and then you can claim refund, because it will not be a payment from ITC ledger. It should not have been paid from the cash ledger, but from the ITC ledger. So if we correctly adjust ITC, there will be a huge amount in cash ledger. So that is a different scenario. So if your scenario is also matching to that particular scenario, then refund may be a possibility. But I don't know whether, I mean, your purpose of asking the question was same. So Pramodji, any other question?
No, I don't think.
So Amit Raghavji just said that consumption concept can be put with OECD guidelines that Avinashji already covered. And he also clarified that he doesn't want to go into detail of these things. And Rahulji is thanking you for this. Okay, and he's also saying that additional argument would have to be made if petitioner wishes to retain the SGST. So para 44, which we already discussed and clarified to everyone. Again, I will say, so any one of you, if you are making the summary of this particular judgment, please specifically mention this para 44 part. Please specifically clarify it. Can you share the full judgment or PPT? Full judgment, you can just please search it on internet. It's being covered by every website which is posting the legal cases. Okay. Mihir Modi is saying amendment in place of supply provision is required, especially in connection to this immovable property related issues, intermediary POS in 13 under section 13.8. So I'm not very sure, but somewhere on the media I read this news that government is considering to remove the provision of this intermediary, that's section 13(8) of IGST Act. They are considering to remove it. So in the future, maybe you get the benefit from this. So Mr. Deepali Kamble. Okay, this Deepali ma'am already, her chats were already discussed. So, okay, these were the important questions or like whatever we had. So, Deepali ma'am, still we are here. If you want to add anything, you can just unmute yourself. So, apart from this, the whole summary was that this particular judgment was about merger, and we are not required to confuse it with the general scenario where the input tax credit is not allowed, where the place of supply is being falling in the other states. But yes, for the merger cases also, because there is a denial, if there is denial in one state, there is universal denial in many states. That's the possibility in case of mergers. So many other states will also try to deny this kind of input tax credit, and their argument will be that their state is going to lose the credit, right? And losing the credit or the consumption was like where the consumption was, that can be an indicative, that can be an argument, that but that cannot be the decisive argument in these kind of cases. What is written in law specifically will prevail over what was the concept or the whole thought process uh, uh, for making the particular law. So with this, I would like to ask Aminaji if you want to add any ending lines.
No, nothing. I think one
Sir,
query is
I would,
already, one query is
sir,
there.
sir,
Yes,
Yes, ma'am.
sir, good evening, everyone, sir. Sir, this issue was practically taken up by Justice Sriram, and he was of the opinion, whatever it is, once my company don't want to stay in Maharashtra, I must be allowed to go along with the credit. That was the thing
exactly.
which was Justice Sriram has taken in his finding also. But that judgment could not come, and this is also findings are. It's a big achievement, sir. I was waiting for this judgment, which will be helpful for my one of my matter which is pending before Punjab and Haryana bench.
Yes, ma'am. Thank you.
So I think, sir, this is only the fact that नहीं करना business तो हम यहाँ से निकल जाते तो हमको सब ले दो. That was
Exactly.
only the judge also was having, both the judges was having the same opinion.
Same opinion.
So this will help. I think even the respondent number, the directions what the order has given, they will come out with some clarification in due course.
Correct. Agreed.
Thank you, sir.
Thank you, ma'am.
Thank you, sir.
So with this, our time is also over. I would like
Ma'am,
to.
I think there is one query
Okay.
of Mr. Mahendra Jain. My dealer has paid tax through 100. What is this?
You want to read me?
Please read.
My dealer has paid tax through 100% input tax credit instead of 1% through cash ledger. After department audit, my dealer has paid again 1% through cash ledger along with the interest. My question is whether the dealer can claim refund, and if yes, then what is the relevant date? That is 2 years from when the paid through ITC or 2 years from the date when paid through cash ledger.
No, I don't think refund is permissible because it is 86B, if I'm not wrong, which
Yes.
is 99, 1% has to be paid out of cash ledger. So since
Right.
I paid 100% out of the ITC, 1% will come back to my electronic credit ledger after payment of electronic cash from electronic cash ledger.
So it will be credited back to your electronic credit ledger, but it will not be refunded to you. So you can utilize your electronic credit ledger. Mahendra Jain ji is raising the hand.
Yeah, we can unmute him.
Yes, 1 second.
Department is denying.
Mahendra ji, you are unmuted.
Department cannot deny, sir.
Yeah, I got, but your date they are telling you is 2 years from when you pay to ITC, and it is now 3 years department audit, so 2 years already passed. So you miss the bus.
No, there is no condition, there is no situation wherein 2 years will be applicable. So you fight for this, you will get it. File an appeal or maybe go to the High Court.
Yeah, we asked to again give it this ITC again give us because we already paid through the cash ledger.
Yes, you will get the ITC, sir. Certainly,
Yeah.
there is no question about it.
But they are saying no, you are not right. When I apply for refund, then also they reject it.
Refund they will reject, sir, but in electronic credit ledger they will have to give it.
Then what is the procedure? How to get that? So
No.
just by letter application.
By way of an application, I think
Okay.
I'm not, because I'm not a compliance person, so I'm
Okay.
not aware how to get it. But legally, you will have to get it.
Okay.
You
Sir.
cannot
Thank you,
retain it.
Thank you, sir.
Thank you. I think we should conclude now.
Yes, so all of the questions are already been answered. So with this, I would like to again congratulate and thank our senior counsel, Avinash ji, and all of the participants and the parliament specifically for giving her small but very effective brief about this particular judgment. Thank you so much, everyone, for joining it.
Thank you.